Well, the power ecosystem in the country is undergoing a dramatic change, and we'll continue to focus on one of the players in that space, and that's Insolation Energy. Why is this one looking interesting? Well, there's huge backward integration which is at play. There's also forward integration which is at play. Essentially, Insolation Energy was making power modules, right? Which is the full module which generates electricity, but not the components of the module, which is not the cell. The cell used to be imported. Now, there's a huge shift in strategy. They have put up a plant in Madhya Pradesh, set to go live in Q4 FY27 or end of Q3 FY27. And what that will likely result in is a huge accretion to margins. And it'll obviously be gradual, but there will be a very, very decent accretion to margins as a result of this. But of course, there are competitive forces. There are larger players coming into the industry within the module space, within the cells, ingots, wafers, and the like space. And therefore, how are demand economics likely to play out, just given the way supply is happening, and how, therefore, influential is pricing going to be? Is this going to be a more commoditized business than earlier expected? We'll try and understand some of these, and of course the specifics with regard to Insolation Energy, as we always do on this edition of the show. Let me first start off with a little bit of a background. This was incorporated, the company was incorporated in 2015. HQ is in Jaipur, and it's promoted by Manish Gupta and Vikas Jain. Essentially, it's a 2,500 crore market cap company currently, and it operates in the renewable energy, solar manufacturing and solar EPC space, does end-to-end manufacturing to O&M, does all of that, including EPC, and also wants to become an independent power producer. All of that. But let's get to it, distill it a little bit more. Let's first understand the story. Essentially, a solar panel is made of solar modules. And what's a module? Well, think of it like a frame, right? The frame is made of aluminum, and inside it, there is the solar module, and the module itself is comprised of solar cells with a glass on top to kind of pack it, right? So that's how it's essentially framed up. Now, in terms of the solar cells itself, the company buys those cells and makes the module. So currently, that's what's happening. Now, the cell itself, or the cost of cells, would be around 60 to 70% of the module cost itself. So a large part of the cost of the entire module is the cell itself. Now, not only are they currently, and the cell essentially is the component which generates electricity, right? So that's how typically one needs to look at the structure of modules and cells. Now, where does the story really change? Currently, they are constructing a 4.5 gigawatt cell manufacturing facility in Madhya Pradesh. This is set to go live in Q3 FY27, production likely fully in Q4 FY27. And that could be the big, clincher or the big change that the company sees. Now, let me talk a little bit about the products that the company does. One is the solar PV modules. I've described what a module is. Essentially, they do solar PV modules. They also do solar batteries and battery energy storage solutions, of course. Ancillary, and therefore the other piece that they do. Then there's solar inverters. Now, I'll quickly describe what solar inverters are. They're basically power conditioning units that convert and manage solar electricity. The solar panels produce a direct current, and the grid and appliances need, of course, an alternating current, and essentially inverters allow you to do that. The services that they offer today. So the products we are done with, the services. One, they do EPC, which is turnkey solar projects. OEM manufacturing is what they do. They also do the IPP under PM Kusum, and they do O&M services. So this is broadly how it's structured. IPP is independent power producer, and they do that as well. Now, let's talk about the big picture. As of today, it's a module assembler, which is what Insolation Energy is. So they buy cells, which is the highest value component, buy aluminium as well in terms of the frames. They assemble it into modules and sell it. Now, from FY27 onwards, Insolation becomes a full-fledged manufacturer. So they have currently 5.5 gigawatts of capacity, of which they are expected to do 2 to 2.5 gigawatts of capacity this year in terms of execution. This will go to 7 gigawatts by next year in terms of module manufacturing capacity. Cell manufacturing will be 4.5 gigawatts by end of this year. So that's how we will see the journey of the company. And they will also do 18,000 MTPA of aluminium frame manufacturing. So that too will then be done in-house. The margin impact and typically how one reads the story, therefore, on the numbers, EBITDA margins are at 14% today, will go to 17 to 18%, likely to go above 20% eventually. That's how the story will likely pan out. And the sell margin currently, which is being paid away, is now likely to get consolidated into Insolation Energy. Let's talk about the financials. And mind you, this is 100% India-centric. They have exposure to around 19 odd states, and that's how it is structured. Let's talk about the metrics, and there you go. So let's look at the 3-year first revenue run rate. There's literally been a doubler on the revenue count for the last 3 years in terms of the 3-year CAGR. So revenue, which was at around 280 crore in FY23, 730 crore in FY24, 1350 crore FY25, and then you've got 2146 crore FY26. So it's been on a sharp ramp up in terms of the revenue growth. And mind you, 2500 crore is the market cap of the company. 2150 crore is the sales that they clock, which is decently impressive. Now you'll see that impact on EBITDA as well, and a sharper impact on EBITDA, because as operational efficiencies kick in, you're starting to see a better EBITDA run rate, and therefore you're seeing a 3-year CAGR of 147% on the absolute EBITDA number, currently sitting at roughly 300 crore, just shy of 300 crore. Let's look at net profit as a result. Even sharper growth, right? 160% in terms of the 3-year run rate, and of course of a very, very low base of 11 crore, you've seen a very, very sharp growth. Currently at 200 crore odd in terms of bottom line profit. Let's look at margins. Q1 numbers not yet out, but margins have actually gone from 6.5% to 13.5%, just shy of 14. They're expected to continue to go up. The one possible miss is that FY26, the top line was expected or guided for 3,000 crore plus, but the manufacturing capacity didn't come on stream, and as a result of which it got curtailed to 2150 crore. Just something you want to keep in mind with regard to the P&L and the margin trajectory as a result. Let's talk about the balance sheet now. 800 crore in terms of the balance sheet size, so 3 times book is what this one trades at. You're seeing a borrowing number of 830 crore, and therefore you've got nearly 1:1 on debt to equity, but you've got 500 crore of cash sitting in the balance sheet as well. That's something which gives the net borrowing number a cushion, and therefore the net borrowing number is at 300 crore, and therefore your net debt to EBITDA would be around 0.4 to 0.5 times. Broadly, that's how one would look at it for Insolation Energy. But there's capex also coming in. We'll try and get a sense as to how much is done, how much is left. Cash flows. This is where one part of the problem lies. Because of the very, very sharp growth, you've seen negative operating cash flow because of working capital requirements. We'll try and understand as to how much this can continue to grow by. By the way, very sharp growth pace is what is continued or expected, and therefore that negative operating cash flow, will that continue, will that not? Of course, the 500 crore cash gives it a cushion in terms of requiring new cash, but for the moment, negative cash flow, obviously something that you are slightly more sanguine about, but when it comes to working capital requirements, which is what it's diverted to, you'd be broadly okay just given the sharp growth. FY25 though, there was conversion from EBITDA to cash. That's how one needs to look at the data. Last off, in terms of return ratios, very, very strong, right? So you've got 20% plus in pretty much all the last 4 years in terms of ROC. Of course, choppy, when there's a sharply profitable year, you'll see ROC numbers go up. Also, the capex cycle and the pipeline, as it starts to even out, you'll start to see this unwind. Likely, the ROCs go up because you'll start to see margin accretion as a result of the backward integration they're doing, and that will likely take the ROCs higher. Let's look at the shareholding pattern. 66% owned by the promoters and the promoter group at this point of time. FIs own 1%, DIs own 1%. Mind you, it's a small company. It's just 2,500 crore in terms of market cap. The balance is held by the public, which is 32%. Let's look at valuations, and currently trades at 12.5 times trailing 12 months earnings. The 5-year average broadly is 62 times, and Wari, and rather I compare the current trailing 12 months with that of some of the peers. That's the better way to look at it. Wari is at 19 times, Premier is at 31 times, MV is at 17 times. So this one trades at a discount to all 3 of those peers, but those are larger players and stronger players relatively, in both in terms of size as well as in terms of scale. This one is relatively younger, and therefore maybe that slightly lower valuation may well be warranted, but nonetheless the discount is still fairly large. What we'll do is to a very short break, come back, speak to both Manish and Vikas on the other side. They'll join us with regard to their perspective of how one needs to look at insulation, of course, as a business, and of course the energy industry, the renewable energy industry as a whole. Stay tuned for that conversation. Welcome back, and let me bring on board Vikas Jain, Managing Director at Insolation Energy, and Manish Gupta, who's the Chairman at Insolation Energy. Great having you, both of you gentlemen. Let me first start off with you, Vikas. Just talk to us first off about the order book, how it's shaping up, and how opportunities are translating for you, how quickly.
Yeah, thank you, Rishabh. As you have already informed to the viewers. No, sorry, Harsh.
No worries, no worries. Please go ahead, sir.
That's okay. So we are coming up with an state-of-the-art cell manufacturing unit at Narmadapuram in MP. That would help us to change the books of this company considerably. Towards the backward integration, the cell has been the major part of our raw material supplies. And since the government of India has restricted the use of import cells or the Chinese cells into these Indian solar panels, so now this plant is of utmost importance. So only the companies who would be manufacturing the solar cells would be able to survive in this arena.
Yeah, no, point taken, Vikas, but give us a sense, therefore, what kind of order book are you sitting on? What's the color of the order book? How much is the order book in terms of the gigawatts that you've won, and how much of that gets executed in the current year, FY27?
Yes, Harsh. Can I explain it? Right now,
please.
As our company,
Yes,
we have right now we have more than 1.2 gigawatt of order book in our hand. That's in value wise, we can calculate it's more than 1,500 crore of the order values. Recently, we have also get one very big order from NTPC Renewables Limited. That is 558 crore of the order. That is supplies in the Lalitpur UP. That should be, I think, also we will supply within this next quarter. We will fulfill that complete supply, and also we have very good order pipeline with our existing customers, with our OEM partners, and other market players also, especially in the Kusum and PM Surghar schemes. So we are confident that this financial year we are going to supply more than 2 gigawatt plus solar panel in Indian market with different schemes.
But you have a capacity, Manish, of 5.5 gigawatts. Give us perspective.
Yes, right now.
Is that capacity not fully live, or what's playing out there?
Yes, the capacity is 5.5 gigawatt, but you know right now the overall the market scenario is the changing, divided in the two part. There is one is non-DCR requirement, another is the DCR requirements. So the market, because of the split and the availability of the solar cell, make in India solar cell in India. So there is some issues, or you can say the complete capacity of each and every manufacturer maybe use up to 60 to 70% of the capacity in this financial year. I think when we get our full capacity of the solar cell, that is operational from Q4, then I think we can fulfill the complete capacity of solar panel also, because majority of the big projects and big requirements are right now with the DCR solar cell. So this year, the capacity should be somewhere we utilize our manufacturing capacity 65 to 70%. But next year, we are 100% confident that 5.5 gigawatt of our capacity we will use completely with our own solar cell and also with our own aluminum manufacturing, which we are upcoming in the Madhya Pradesh Narmadapuram.
Okay, so that likely means that FY27 you'll see some growth, but you won't see the kind of growth that you'll likely see in FY28. The way I'm thinking about this is, and is that right, Manish? Is that how one would look at it? That FY27 may not be as strong? And how is order traction coming your way? Is there any concern on that front?
No, not order concern of the front, but the requirement of the majority in the solar cell requirement in the market. That is, I already told you, that is divided in the two part right now. One in the DCR panel and another in the non-DCR panel. So DCR is with the domestic content requirement where you need the cell make in India. That is slightly right now the problem, or you can say the availability of the cell is crucial in our country, because we have right now the complete 25 to 30 gigawatt of the solar cell capacity right now, the manufacturing capacity in our country, and the demand is more. So maybe 65 to 70%, I told you, the capacity will
Correct.
be total manufacture capacity we will utilize this year. But is the next year we will 100% confident we will utilize complete capacity with our own cell, and the same
Point
reflect with each the complete market, not with the insulation energy, with the complete overall Indian market will be right now the like this, the DCR and non DCR cell requirement.
So, Manish and Vikas, if I'm understanding this right, there's no concern from a demand standpoint, right? Regardless, and even if
No, no,
newer
no.
and larger players, uh, if newer and larger players are to enter, and there are reports that capacity is going to go up multifold in the next few years, just given the kind of traction that you're seeing on the business, there shouldn't be much of a concern, right? Is that the right way to think of it?
Yes, you can say that the government is already have set up the 500 gigawatt of the solar, the total renewable capacity of our country till 2030. Out of that, nearly we have required 300 gigawatt from the solar. And till, as for my knowledge, till June, we have completed around 158 to 160 gigawatt of solar installation in our country. So it's in next 4 years, we need at least 40 to 50 gigawatt plus every year we need to add the solar and other the sources of renewable energy, and this is only with the current the government, whatever the schemes government launches, with only that. In the future there is different type of schemes are also under pipeline, which we are think that should be launched by the central and state government very soon. And also the different sectors which are open, the one is very big sector, that is green hydrogen sector is there, and the other AI related sector is there, the data centers are there, and there is also one sector which is very soon open in India, the demand should be open, that is bullet train, the corridor. That it's the that corridor also required the very huge requirement of the energy. So lots of different sectors are very soon open in our country. With that, the solar is on incorporated with each and every requirement, each and every phases. Also, government launch very soon PM Kusum scheme part 2, PM Surghar 2.0. So we are confident that within up to next 10 years, the requirement of power in our country should be increasing, and solar 100% will play a very major role in that power requirement for our country.
Got it. Vikas, if I can come to you, the other levers for growth for you could be battery and energy storage and the O&M side of things. Once you set up the plant, of course, O&M is required. How are you capturing that opportunity? Everything that you build, are you also signing contracts with regard to O&M?
Yes, we have already signed contracts for almost 400 megawatts or our own projects in Kusum scheme. They are located in different parts of Rajasthan. So out of that 400, almost 70 megawatt is operational now. We have signed contracts for O&M for those plants to any third agencies, but very soon we would be uh, starting our own vertical for the O&M of solar plants. Regarding BESS, we are under study. We are still studying the BESS manufacturing process, and we have already identified some equipments for required for the BESS manufacturing line. Maybe by next year we will announce to manufacture for the BESS, and we have already started participating in all tenders where BESS application is required. Recently, we have participated in one tender, but unfortunately, we were not able to take that due to the prices, lower prices. But again, we are trying to bag some orders so that we can start into BESS also.
Manish, two-part question. One, on the cell manufacturing side of things, timelines, are you confident that December 2026 you will achieve the start of production of cells? Because that is critical for you to hit that 7 megawatt capacity which you will build for FY28. And if that were to happen, what will the FY27 and FY28 revenue number look like? Broadly, just give us a sense.
The FY, the whatever the annual growth we are regularly doing in last 3 years, we are confident that FY 27 we are definitely achieve that growth. So we are confident that we are this year from 3,000 to 3,500 somewhere crore we are able to achieve this year. Hello, hello.
Yeah, please go ahead. So, okay, so 3,000 to
We are able to
3,500 this year, FY28.
FY 28 somewhere around 5,000 crore plus
Okay.
we are targeting with our whenever cell manufacturing our full fledged coming, and also our aluminum is also started, and our all IPP project should be also completed, and we are confident that till then we are also increase our manufacturing capacity of solar panel also. We have already identify the land in MP, and also we are very soon announcing the ingot and wafer manufacturing at the same premises where we are currently manufacturing. Our cell manufacturing is upcoming in the Narmadapuram, the 4.5 gigawatt of ingot and wafer manufacturing at the same location.
Vikas, the one key question is cash flow and cash flow from operations. How should one look at the working capital requirements, the capex, and the kind of cash you sit on and the kind of debt? Just give us the picture as to what happens next in the next year or two as you scale from this sub 2,500 crore to 5,000 crore in terms of revenue.
So since the company is growing at a very fast pace, so your cash flow will be in strain. So as we are growing almost 2 times, we require working capitals. So that much cash flow is not generated by the own funds. So debt or the equity company is still searching the best modes for the refinancing. So cash flow for the next 2 years till this
Rate do you borrow?
Bhopal,
Vikas, at what
this
rate do you
Bhopal
borrow?
plant is fully operational. That's a standard 8.5.
Okay, all right. And there is no concern. Sorry,
All the borrowing is
go
from the
ahead.
nationalized banks only.
Got it. Understood. Okay. And cash flow positive when, Vikas? In what year?
Cash flow positive in next 2 years. In
In the
next two
next
years,
2 years.
we see that the cash flow will be the positive.
Okay. All right. Thank you so much, Vikas Manish, for coming and giving us this perspective. We'll let you go. Thank you so much. Appreciate your time. All right, viewers, completely timed out on this edition of All About Your Company. Very fast-paced growth expected. Of course, margins will continue to improve. 17% is the guidance on the con call with regard to margins. Couldn't quiz them more on that. Ran out of time. Completely timed out. Thank you so much for joining us.